So we get a lot of questions at Vetted Biz about LLC versus corporations, what's best for your franchise business in 2022 and the future. And honestly, this is really a case-by-case situation. We recently interviewed a CPA. You got to talk to a CPA about what the best structure is to start, as well as maybe you switch it down the line based on your goals and what you prioritize from the business, whether that's potentially making it big when you sell the business or minimizing your annual taxes and quarterly tax prepayments. It's going to depend. So you've got to talk to an accountant and have a CPA that's going to work with you as you grow your business. So this is not tax advice. I just want to give the basics about LLC versus corporation. I'll share from my experiences on what I've seen franchisees do over the last 9 years that I've been in the franchising industry. So first, LLC stands for Limited Liability Company. It's granted by individual states in the US. They have very few requirements and are attractive because there's liability protection and potential tax savings. This means that any debts and liabilities incurred to the business are generally separated from the business owners. You could pierce that corporate veil. That's a whole nother video, a whole nother conversation. But as you conduct business, people need to understand it's your company, LLC, and not me, Patrick, doing business with you, another individual or another company, that it's your business and you're representing your business. Now, a corporation is an organization that's legally separate from owners and operators, similar to individual contracts, loans, assets, and liabilities are all applicable under a corporation. Corporations are also limited liability organizations, essentially separating any legal responsibilities from the owner. Besides fraud and really bad stuff, there's some ways, again, that you can be liable if you're running a corporation. So essentially, if a corporation is subjected to a lawsuit or faces financial hardships, in most cases, the owner is not going to be liable for the debts incurred. Corporations are formed for a variety of the reasons, not just to make profit. Many corporations own subsidiaries. For example, Alphabet Incorporated, it's the parent company of Google. Alphabet also owns YouTube, Android, Waze, and a variety of other organizations. So it's really set up as a holding company, essentially. And you see that a lot with corporations. C corporations are also able to issue shares of stock to owners, founders, employees, investors. There could be hundreds of owners, and the system's set up like that. An LLC is not conducive to have 100+ owners of the business. There's limits in terms of the number of owners, and it becomes much harder as you can't issue stock as a limited liability company. So C Corp makes it a lot easier to raise outside capital, and if the company is able to go public, have an easier initial public offering. C Corps, like any corporation, are recognized on an international scale, and it's more recognized than an LLC, as different countries have different regulations for that type of structure, where the C Corp is more recognized on the international scale. And there's just a lot of flexibility in terms of how you structure the C Corp in terms of shares, voting rights, etc., which it becomes more complicated for an LLC, especially as you add members to that LLC. C Corps tax on the federal basis, tax largely on the state basis for income. Basically, there's a double taxation. If you want to pay a distribution, the C Corp's tax on the income, and then you as the owner taking money out from the business are taxed again. So there's some negatives there, but for closely held businesses, there's up to a $10 million tax break only for C Corps. So that's something to look at if you plan to hold the business for 5 years and potentially get acquired. There can be some significant tax savings on the capital gain if it's structured as a C Corp. And we'll include an article from Forbes that we came across that explains this in more details. So again, the high level LLC, you just have a partner, it's just yourself, probably the best structure. However, for franchise brands, healthcare, some property management franchise, again, it's going to depend state by state. You might have to have a C Corp, an Inc. There are franchise industries that it's fine having an LLC. So this is where you've got to talk to the franchise you're investing with, as well as a trusted CPA, so you don't start creating entities that you can't use, and then you start creating contracts with that entity, and you've got to switch it over to C Corp or vice versa. So LLC versus C Corp, benefits to both. For your unique situation, I strongly recommend you talk to a licensed CPA to understand what is the best option for you to achieve your goals of business ownership as you have that company open.